This is your mortgage housing update as of January 29, 2026, and let's go through the rates. So before you go through the rates, yesterday there was a Fed meeting and the rates were unchanged because according to Fed, the inflation is somewhat elevated. It went up a little bit, but they're still fine with that. And the job market is stabilized, right? So according to them, they want to hold on to the rates. So according to Freddie Mac, we are still hovering around 6.09 for your 30-year conventional conforming loans. And according to Mortgage News Daily, we are hovering very similar, 6.16, and versus your FHA 5.82 here, okay? So the next Fed meeting is going to be in 6 weeks, but it doesn't mean that the rates won't change. The rates will change once we receive new data for your inflation. Right now we are at 2.7, and for your unemployment, which is at 4.4 right now, okay? And the bond market will react depending on what type of data that comes out for your unemployment and inflation in coming weeks, okay? And this is your top markets for the sellers. This is throughout the whole United States. For New York, you can see Buffalo is on the higher end as number 2, and New York City is at number 3 here. So if you're a seller, you should be able to get the price that you want for your property if you're living in these states here, okay? Next is that let's go through a mortgage calculator. So let's say you're buying a house for $600,000. You're putting down 10% down payment. That's at $60,000. So your loan amount is going to be $540,000. At today's rate, right, 6.16, you're looking at your mortgage nearly $4,168, right? And the breakdown for this, that principal and interest is going to be $32.93. Your property taxes, we're just estimating it around $500 per month. Your home insurance, $150 per month. And your PMI, this is your mortgage insurance because you're putting down less than 20%. So you're seeing $225. All these numbers can change depending on your scenario there. But anytime you're putting down less than 20%, right? There's so many people who would love to go with FHA because that's what they see, that, hey, the interest rates are lower. But if you're putting down less than 10%, your mortgage insurance that we spoke about, that will never go away, right? If you were to put down 10% or more, then it goes away after 11 years. That's a long time. So always ask your loan officer or ask us at our LG Mortgage team here, why not go with a conventional loan if your credit scores are 620 and still put down less than 20%, and your mortgage insurance will get removed once you hit 20% equity. And last but not least is your bank statement loans. This is great for people when they show their taxes and they don't qualify enough or they want a bigger house. Then your loan officer or our team here, we can offer you a bank statement loans where your credit score needs to be 700, but we're not checking your tax returns. We're simply asking for your bank statements for your 24 months and we'll qualify you based on that. So there's plenty of loan options. If you are looking for a property for yourself, please get in touch.